I'm Chris Preston.
I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice to individual investors for 55 years. There haven't been a whole lot of times like this one, fun times in the market. We have lots to talk about. Not all of it positive, which we're going to get to in a second. But first, we're going to welcome on Ed Coburn, who's CEO and president of Cabot. Just to start things on a positive note, we're going to talk about our what used to be annual Cabot summer conference that is returning this August. We're going to tell you a little bit about that at the top. Then we'll get everything in the market. Brad, tell people what we're going to talk about with the market.
Obviously, we are going to talk tariffs and market meltdown. We're also going to talk about the latest jobs report showing that some of the hard numbers are still holding up despite what
Yeah.
the market's reaction has been to the headlines. And we will touch on Newsmax, which recently IPO'd and has become something of the latest meme stock.
Yeah, lots of fun stuff to get to. And we're scrapping Defend the Take today just because who can make any predictions in the middle
Yeah.
of this kind of unprecedented thing? My prediction from a few weeks ago that we had already bottomed for the first half of the year is already in the scrap heap. So yeah, we're just going to focus on the market. But first, we're going to welcome on Ed Coburn in just a second. All right, we welcome on Ed Coburn, President and CEO of Cabot Wealth Network. Ed, I think this might be your first time on Street Check. I can't remember.
It is. I'm an avid listener, gentlemen. I listen every week, whether it's just you, whether it's with guests, or whether it's the two of you and a bunch of hot sauce and the evil producer forcing you to drink
That's right.
all of that
Yeah,
hot sauce. So
it's becoming increasingly evil, but that's probably a favorite of at least everyone who works at
I just
Cabot. That's
like to
probably a favorite.
challenge you. I like to challenge you, push you out of your comfort zone.
Yeah, well, mission
that,
accomplished, especially the last time.
that's what I meant when I said evil, Madison.
Right. So yeah, Ed, we wanted to obviously lots going on in the markets, but we wanted to have you on briefly to talk about we're bringing back our what used to be annual summer conference this August 13th through 15th in Salem, Massachusetts, Cabot headquarters. It's the Investing Masterminds 2025 is the name of the conference. Used to be known as the Cabot Wealth Summit, maybe sort of still is. But wanted to give you a chance to talk about that. We obviously it went online for a couple of years during COVID. We couldn't be in person, and then that wasn't so much fun. So we sort of scrapped that, but now we're bringing it back in person. It's really a good time to tell people a little bit about what it sort of entails.
Yeah, great. Thanks, Chris. Yeah, we did this 8 years in a row in person, right up to 2020. Obviously, when the pandemic hit, in-person events went away. We moved it online. It didn't provide the same kind of opportunity, so we suspended that, and then went, but we knew we would bring it back. And then the market was in such malaise that we just felt we couldn't get people coming back. But obviously the market and what we're going through right now underscores the market is back. There are opportunities, but we felt that there's a lot of reason to get even more hand-holding for those who wanted and more deeper insights. And as you know, these events we strictly limit the attendance. So there no more than 125 people, and we've sold out in the past. And I think at a time like this, to be able to sit down with our expert team of analysts and hear exactly what they're thinking right now, be able to ask questions with them, get them during breaks, have lunch with them, ask them things over dinner, over drinks in the bar in the evening. That kind of opportunity, I think, is really valuable. And of course, the opportunity. These are all serious investors that are attending this conference. So there's just networking within among attendees as well. So it's an incredible resource. I'll
Yeah,
pause
no,
there.
it's a good time. It's obviously a level of preparation on our end, but I've been to, gosh, like maybe five of them. Pre-COVID, I've been with the company for 10 years, and it's a good time. Great to meet subscribers in person for us. I'm sure, and vice versa. Yeah, all everyone's favorites will be there. Jacob Mintz, Mike Santolo, Tyler London, Tom Hutchinson, Carl Dalfeld, Michael Brush, everyone who's appeared on you've seen on this podcast, Nancy Zambell. So it's a good time to sort of intermingle. And Salem is also a beautiful. I knew nothing about Salem beyond, witch trials when I started working for Cabot. I don't live there, and it is a beautiful historic town. There's the Witch Museum right next door, I think, to the hotel.
There is, yep, and it's a tourist town. We're 15 miles up the coast from Boston, and we're right on Salem Harbor here. It's beautiful in the summer. Lots of great restaurants. The PBD Essex Museum, which is a great museum. There are beaches. There are all kinds of things to do and take in while people are here. But I think the main thing is the investing. And as you say, every you will hear from every one of our analysts. We'll be kicking off with a keynote from Mike Santolo, our chief investment strategist, and he's fantastic. People seek out his thoughts and ideas on the market all the time, and particularly in the last 24 hours, I know he's been extremely busy, and just really great stuff. Also talk about some things, some new initiatives that we'll be launching at Cabot to help investors. So I think it's a great opportunity. People that have attended have been really excited about it. I understand there's the link on the Cabot Street Check website, links to information.
Yes,
on the summit.
cabotwealth.com/street has all the information for if you want to register. Again, it's August 13th through 15th in Salem, Massachusetts, but cabotwealth.com/street is where you can go to sign up.
Absolutely, and one of the things I want to highlight on the agenda for this audience in particular is that we will be having a couple of live sessions of Street Check, one each day that you two will be hosting and moderating, and that's a really exciting new part of this program that we will be doing. I'm really looking forward to that, obviously, as I look forward to Cabot Street Check every week. So keep up the great work. Hey, I know that it's there's a hell of a lot going on in the market right now that you got to talk to that's much more important than hearing from me. So I'm happy to step aside, and but I definitely encourage people to come. I almost forgot. We have an extra early bird discount in place right now through the end of April. People save $800 if they register, during the month of April. So that discount will be in place till April 30th or until we sell out. So if we sell out beforehand, sorry, it's not just the discount goes away, but there aren't any seats available. So I encourage you, if you're thinking about it, go take a look. If it's something you want to do, sign up because space will fill up and the discount will go away, and $800 is nothing to sneeze at. So anyway.
Yeah, you get the discount again
that.
at cabotwealth.com/street. But yeah, thanks, Ed, for coming on.
All right, thanks, Chris. Thanks, Brad. And now let's get on to the really important stuff. Nice to see you.
All right, thank you.
Ed.
All right, thanks to Ed for coming on. Now we begrudgingly get to our regularly scheduled programming, which is not as sunny and bright as the conversation we just had about the conference. The market is in meltdown. That's number one in our big three. NASDAQ, as of this moment, is in a correction. Now, it has not reached a closing correction yet. We'll see where it finishes up the day. Market is once down more than 4%. Now it's like 3%.
Yeah, so it tagged bear market levels.
Did I say bull? What did I say?
Correct. You said correction.
Oh, yeah, sorry. Yeah, bear market.
So,
bear market, and the NASDAQ down 21% at its low point. S&P down 15.5% at its lowest point. Russell is in a bear market. Small caps 25%. Where do we go with this? So the market doesn't like tariffs. We knew that. We knew that there was going to be this Liberation Day thing on Thursday, which didn't happen until after the market closed that day. So the stocks were at least up that day because, or sorry, Wednesday. Um, so the market was at least up that day because we didn't know what was coming just yet. But it was pretty much worst case scenario. Reciprocal
Yeah.
tariffs. Across the world, 34% China. I mean, the stiffer tariffs on, places where we perceive to have the biggest trade deficit. Was it 40 plus percent on Taiwan? Was it? I don't know.
Or
They're everywhere.
so it. All right. So the tariffs are the math behind it. You and I talked about this like immediately after because I was watching the press conference and saw the announcement. And the thing I told you is, oh, this number seems wrong, right? Like
Mhm.
that was my first instinct. So I'm like, oh, Vietnam stands out to me. They're a big trade partner. Like tons of our soft goods, 17% of our footwear, headwear, apparel, and like textiles come from Vietnam. I'm like,
Mhm.
all right, well, I'm gonna look at Vietnam because they said the president said that Vietnam had a 90% tariff on the US, which seemed wrong. I'm like, all right, well, maybe they're just averaging tariff percentages by category, right? Because if you look at like the tariff environment for a lot of other countries, a place like Vietnam will probably have like a 700% tariff on small electronic bikes or something like that. Something that they can produce domestically where they actually have a vested interest in offsetting US competition in it. So, my first instinct was like, we'll throw away the idea that it's weighted or that it considers what the dollar amount is. Maybe it's just an average of the aggregate tariffs across all product categories, which is not a wise way to do it, but is more defensible or demonstrates that some thought went into it. What it actually is it's the trade deficit. So our deficit with Vietnam of like 111 billion
Yeah.
divided by the total number of the total dollar amount of exports. So 130 billion is like the exports that we receive from Vietnam. It's meaningless. It's nonsensical. It's not reciprocal. There's no rationale behind it. The rumors. So that was not announced. That was not announced at the time that these numbers were released. That was something that the internet, I know like Reddit and a few reporters on Twitter were like, "Hey, we've started doing math on this, and turns out that this is just how you get the number." And then that was followed up with a White House budget office number where they provided their own equation, where they added a few Greek symbols to make it seem like more thought had gone into it. Um, at the same time that we imposed extremely high tariffs on the trade partners that we get the most goods from, we imposed 10% tariffs on a number of uninhabited islands. Uh, so what Heard and McDonald Islands have no human population, but they are subject to 10% tariffs. It's it is probably the worst single financial decision I've ever seen in my life. Is I think the long and the short of it.
Yeah. I mean, the
Uh,
market is certainly reacting that way. And when every economist or virtually every economist is saying this is going to lead to a recession, a global recession, perhaps by the end of the year, um, saying how much this will subtract from GDP, US GDP growth. I think so. The thinking behind it, I'm not going to try and, get too much into that, but I think it's pretty clear they're hoping to use tariffs as a way, as leverage, as a way to get people to or other countries to the bargaining table, give us what we want, whatever that is. Um, but it seems like that's not, as we saw with Canada last month, and we're now seeing with China, they're just saying, okay, we're going to tariff you the same rate, 34% China, which sent market, this is what's sending markets down even more today. Canada pushed back. The one that sort of bowed to the tariffs last month. Mexico was the one market that was up yesterday, partly because their tariffs didn't go. I think they're still at 10%, I'm pretty sure. Their market was actually up yesterday, but everything else was down. It's very telling, though, that the worst performance of any major market was in U.S. stocks. Um, the Nasdaq was down more than 10% in just the last 2 days. S&P more than 8%, whereas the Hang Seng Chinese stocks 1.5%. Stocks Europe more than 7%, so that's not nothing, but still less than ours. Like I said, Mexican stocks up. Japan, which was levied one of the higher tariffs, down just only more than 5%. Canadian stocks are close to where we are in terms of losses the last couple of days on a percentage basis. But the market is telling you that it thinks this is a really dumb economic policy by punishing the country that is enacting the policies more than the countries and markets on which the policies are aimed at punishing, I guess, for lack of a better word than punishing. So that's where we're melting down here more than anywhere else. And this, to me, feels a lot like the March 2020 COVID crash, where stocks are just crashing or in free fall because it's so unprecedented. In this case, this is more self-inflicted wound, but it's something, we've never seen before. Tariffs on, the world, going both ways now. And no one knows what's going to happen. And that market hates uncertainty more than anything. And just as things were, so uncertain in February, March 2020, like when will the world be able to reopen? Now it's like, will these tariffs stay at these levels? If so, how bad will the damage be? No one knows anything. It could change. It could change by the end of the day. Trump, I know, just said like policies aren't changing, but he has changed them quite often, and especially specifically tariffs over the last couple of months. So no one knows anything, and that's why you're seeing stocks in free fall.
Yeah, I think that this has a longer tail. I mean, fully acknowledging that, no, we do not know anything, right? Like Trump
Yeah.
is famously mercurial and will make moves based on whims. He also doesn't understand tariffs. The the thing that has me more guided than you on optimism is the arbitrary nature in which the tariffs were applied. Like there doesn't it. All right. So I'll look at Vietnam as, just since we were talking about it. Vietnam preemptively lowered their tariffs on U.S. imports ahead of
Mhm.
tariff day, and they
Yeah.
still caught the same
Right.
flack as everybody else. Um, a negotiating tactic only works if you are a serious counterparty.
Hmm.
Um, there is no evidence that the U.S. is a serious counterparty in any of these trade decisions, right? Like trade is very nuanced, and the White House, I guess, acknowledged via a press release or comments from somebody saying that, well, the reason that we chose to do it the way we did is it would be complex, if not impossible, to decide how much of a trade barrier actually exists to U.S. goods and services. To which I would say, no, that's not true. You could dollar weight and find the effective tariff rate on all goods. Like that's a starting point. There are starting points. Even that doesn't factor in currency controls or not or I'll say anti-competitive policies. Um, the U.S., the White House specifically, has demonstrated that it's not a serious or reliable trade partner. We are essentially taking our ball and trying to go home from the global economy. And what we are telling the world right now is, hey, if you want to play with us, everybody's got to play with us, but you got to follow our rules. And they're saying, no, we're just going to play with each other. We
Right.
don't really need you here. Um,
Right.
I the other problem with tariffs is this is effectively a just back of the envelope math, 6 to 10% price hike probably on consumers. Nike, for instance, their cost of goods leaving the factory is about 25% of what the retail price is. So if we're going to throw a 46% tariff on Vietnam, where a bunch of that manufacturing happens, or in aggregate 54% tariff on China for all goods, that's going to add in the neighborhood of, 6 to 10% of Nike's costs that will either have to be that's going to have to spread out among higher prices for consumers, margin hits to Nike, or I guess you could have negotiations with their providers where like they can push it further down the food chain. Um, but it's so untargeted and unserious that there's not really an easy way out other than rescinding these. Um, there's a TSMC facility, a fab that's being built near my home that went under construction in 2021. Um, Still not fully operational. It's supposed to be completed sometime this year. They're in like a prototyping mode right now. So there's not really a quick economic way to onshore a lot of construction. But my suspicion is that this is a tax raising mechanism because the latest like Senate budget proposal has another $1.5 trillion of tax cuts by eliminating the estate tax and lowering corporate taxes more. The problem with that is that if tariffs are a tax raising mechanism, which is what they give the appearance of, they only work if we pay for imports. If they work as tariffs do, which is promoting the purchase of domestically manufactured goods, they don't raise taxes. So there isn't a world in which this works the way that's intended to work. So I really think that this has a much longer. The only way out of this quickly, in my view, is a reversal of these policies, which I don't see happening if they're a tax raising mechanism. I don't. This will hurt U.S. businesses a lot for a long time. This will hurt consumers a lot for a long time. I mean, like the only saving grace is how volatile Trump's decision making seems to be.
Right. Yeah. And, he, more than any other president, at least publicly, sees the stock market as a scorecard. And right now he has an F. I wonder how much markets, there's a $3 trillion wipeout in the last 36 hours. And worse since 2020 to bring up the COVID crash parallel again. At some point, I would imagine he's getting pressure from some of the biggest business leaders, corporate leaders out there. Like Amazon's Jeff Bezos lost the most wealth in the last 2 days. So some of the richest people in the world who've been supporting him, Bezos, Zuckerberg, obviously Elon Musk. At what point does it surpass their pain threshold? It starts to get pressure to, get the market right. We'll see.
I do want to say there is one other maybe pathway out, and that's the Fed.
Yeah.
Right. Like the thing that was like obviously the coming out of the COVID pandemic, people finding out like, hey, it's not gonna wipe out 10% of the population. It's like, yes, it's damaging and it's harmful and people are suffering and dying, but it's not the end of the world, right? Like
Mhm.
the other thing was cash injection into the system, rates to zero. The Fed foaming the runway to support the economy, the administration sending out cash, the PPP loans, like that massive cash injection was part of in my mind, maybe the largest part of the reason for the quick bounce back, and then
Yeah.
a lot of that subsequent bull market as well. Like I don't want to fully discount the possibility that there is like some sort of like break in case of emergency, massive consumer bailout. It just the more times you pull that lever, the less times you can pull it going forward because then the Fed is dealing with more inflation. And
Yeah.
more elevated valuations. Like at some point, you do sort of have to rip the Band-Aid off. I don't know if this is the time though. If it's not, if Powell comes out and is like, "Hey, we're going to cut rates 11 times this year," and it's, they're going to go back to sub 1%, then yeah, I think we do get the quick
Yeah.
recovery. But if this
Yeah,
is the
I
Band-Aid
think
moment,
we had set what did we set the over under on number of cuts? Was it like 1.5 a few
one and
weeks
a half,
ago?
yeah.
I think I'm taking the over at this point. I think I was already at 2, but I could see more than that now. Yeah, Fed is might quickly flip from foe to friend again, and possibly market savior. We'll see. Um, yeah, I guess the hope is that the the swift nature of this crash delivers in a similar way to 2020, where on the other side of it, a quick rebound and a ferocious rebound, different circumstances, but and that it's not more like '07 through '09 recession, which was more of a slow burn, where stocks from peak to trough they started falling like late '07 and bottomed in like March of '09.
Yeah.
Um, so which could it be? We don't know. And that the not knowing is why stocks are falling so much right now. Um,
Well, the other thing that's important to note is that um, tail length is going to depend a lot on counterparties, right? Like we've only heard from China.
yeah,
Supposedly China, Japan, and Taiwan are going to operate as like a Pacific trade bloc in
yeah,
how they respond to the U.S. And China has come out and said they're going to impose a 34% tariff.
mhm,
If Europe if Europe comes out, if the EU comes out and says we're going to impose retaliatory matching tariffs, so 10%, right? I think that was the tariff floor, or no, was it 20% on the EU? Sorry. So if they come out and say we're going to impose 20% tariffs, but it's only going to be on imported goods and it's not going to be on imported services, that shows a strong desire because we mostly import services, or I'm sorry, we mostly export services. That shows a strong desire not to actually hurt our economy or not to actually retaliate. It's more of like we can't let this stand without doing something. It's a show of force. So
mhm.
there are paths like that, but now we have to wait on decision making from essentially every country in the world. Right.
Right,
This isn't just us punishing Canada and Mexico and waiting for their response. This is us punishing every other country in the world, and now we
right,
need to know how they're going to react. So
right.
they're, I don't know. I wouldn't be surprised to see more global trade blocks start emerging.
Yeah, I mean, I guess the one difference between this and certainly COVID and even the recession, '08, '09 recession, is this was something that was done
Yep.
overnight and can theoretically be undone, or at least to a certain degree undone. Whereas, COVID, you couldn't put that was going to take years to
Yeah.
unwind. A recession, like we're going to get to the hard data in just a second. A recession is something you can't quickly, undo. We're not in a recession yet, which leads me to the one sort of silver lining today. Not that the market is focused too much on this yet. The new jobs report came in for March, and a little better than expected. 228,000 jobs added. Unemployment rate did tick up from 4.2 to 4.3%. I think I have that right.
4-1
Uh,
to 4-2.
or 1 to 4.2, excuse me. Um, and so as of now, at least the hard data is different from the soft data, where, consumer and investor sentiment is the lowest it's been in years. But the labor market is holding up so far. Um, and, we're not in a recession yet, but we got to wait on some more data there. Um, how much of a silver lining is this? Does this even matter unless does this just not matter until all these tariff policies are reversed?
I don't think it does.
Yeah.
And I think part of that is the lead time on new hires, right? So let's say you're adding 240,000 or 254, whatever, however many jobs. Um, these jobs were filled in March
Yep.
before tariff imposition.
Right.
The roles were probably opened at the end of the fiscal year or at the end of the calendar year last year, meaning they probably, depending on how the jobs sort out, like if it's temp to hire jobs or if it's like fast food jobs or whatever, like you can fill those very rapidly. But if it's white collar or skilled blue collar work or any of that stuff, you probably have a month or a month and a half lead time between deciding you're going to open the job and then subsequently filling it. So my suspicion is that the elevated jobs numbers for, or the positive jobs numbers for March um, are really just a long tail from January, February, because I mean, like you remember how everybody was bullish in January.
Mhm.
Everybody was bullish in the first half of February. Things looked great. We had a really strong economy, despite some unevenness in it. Um,
Yeah.
it looked like consumer spending was going to hold up, right? Like the high net worth households were spending money still. Everybody was optimistic because of stock market returns. Property values were holding, even though like housing was slowing down a little bit. Um, so there was a lot more optimism, and then that flipped on a switch. Like that flipped on a dime. That flipped hard.
Yeah.
So
Since basically mid-February.
yeah, so I bet if a month and a half is like actually the lead time, I bet April will give us a more accurate snapshot of what the March hiring environment really looked like. Um,
Right. Yeah.
but I mean, the other thing is like, what number is back to the Fed? What number is the Fed going to respond to? Is the Fed going to look at this number and say, hey, the hard data, despite
Yeah.
what we all want to do, regarding anticipating what could be the outcome, the hard data, the last hard data we see still looks pretty solid.
Right.
So we can't cut rates. And like June, I think is their next like the next date that people are actually looking for potential rate cuts. By then, I imagine if there's any kind of immediate fallout from the tariff stuff, that'll be factored in. Um, yeah,
Yeah.
it's great that we saw it, but I think it's residual from earlier in the year more than predictive of what we're going to see going forward.
Their next meeting date is May 7th. And there is now, according to FedWatch, CME Group FedWatch tool, there's now a 41.6% chance, um, people think 41.6% chance that they will cut rates then, which was almost, it wasn't nothing, but it was way below that before. Now, to your point, in June is when now 100% of the market, 0.1% of the holdouts, basically 100% of the market thinks there'll be at least one rate cut by June, if not two. 58% one cut, 41% two cuts.
This is where we have talked about this before. Probably not this year, but we have talked about this before. It's like there are good Fed cuts and there are bad Fed cuts. The bad Fed cuts are the rescue cuts.
Yes.
And when people say like, oh, every time the Fed cuts, we go into a recession, right? Like I think we probably heard that talking point a bunch,
Yeah.
last year. Um, what they mean is, when the Fed is making rescue cuts,
Yeah.
that's preceding a recession. That
Right.
is honestly, recession is probably my base case right now.
Yep.
Obviously, I'm always bearish, right? And if you're bearish, I'm more bearish. Not always, but that's sort of my base case. I don't think the market will respond super well to cuts, but I do think that will contribute to a longer tail.
I mean, it says it all that the thing that I think prior to the last couple months and all the tariffs, the thing we were most rooting for and was maybe holding back the market was high treasury yields. We got up to close to 5% in mid-January. And that's what in December and January that was hurting the market. Stocks fell as, bond yields crept up. Now we're down below 4%. And like you said, not in a good way.
Yeah, flight to safety.
Yeah. So this is what we thought we wanted, but not this way. And
I,
no one cares right now that treasury yields are below 4% because it's for a very bad reason.
yeah, earnings. So we've seen some Wall Street banks cut like year-end targets. I What we haven't seen is a lot of cuts to forward earnings targets. So I do think that Q2 fiscal Q or calendar Q2 earnings will probably be pretty instructive.
Yeah.
Um,
Yeah. The earnings that start in like a week probably won't tell us a ton, I wouldn't
no,
think.
but if they're cutting forward guidance,
Yeah.
that's where because I don't. You said it earlier. This was sort of worst case scenario.
Hmm.
I was not expect like this was way worse than anything I was expecting.
Yeah.
I figure targeted tariffs that specifically go after a few a few sectors or a few segments of economies to try and enforce concessions. This blanket approach doesn't doesn't give that impression in any way. Like let's just as an example, coffee,
Hmm.
right? We don't have a substitute for coffee that we grow in the US. It's just we don't have the environment for it.
Right.
Why there's no economic reason to ever punish a coffee import or a buyer of coffee that's being imported because there's no replacement good. Like you can't there's no outcome that you can engineer by imposing a tariff on a good like coffee. Coffee should always be exempted from tariffs, uh, economically speaking. Like there's no you can't there's nothing you can force.
Yeah.
So I don't know. I have this has been I've been infuriated the last couple of days.
Yep.
And it is just like I said, worst financial decision I've seen in my lifetime. I was in the industry. I was a broker when Lehman went under. Great financial crisis was like the first crash of me being a stockbroker, being an investor,
Hmm.
and that was not self-imposed. That was people getting
Right.
greedy and taking advantage of this of systemic shortfalls in like risk controls. This is entirely self-inflicted. It was entirely avoidable. We took what looked like a strong, if maybe overheated economy, certainly overheated stock market, and we just steered it into a wall
Yeah.
for no reason other than maybe tax cuts for corporations. Like that's the only thing that I can sort of make a case for. Long term, some of this pain was going to be felt, right? There is a case I think to be made for reshoring some stuff, but you don't do it with a shotgun, you do it with a scalpel.
Yeah. Well, market's not overvalued anymore.
Well, we'll see what
Well,
earnings guidance looks like.
that's true. But hey, there'll be glass half full. The when all this tariff nonsense subsides to the Wall Street's liking, or like you said, Fed intervenes, there's gonna be lots of opportunity out there. As a Mike Santola always says, the big the big money is made in
Big
the first
swings.
upswing. How does he phrase
The
it?
big money's made in the big swings. It
Big
was
swing. Yeah. Yeah.
Jesse Livermore. I think he just
Right.
told that to his subscribers in the last week or so.
Right. So hopefully we're sitting here a week from now and things don't feel quite as dire. You know, we'll just see. Every day feels like a week with some of the policies being thrown out there or taken away and all that. But okay, let's end on a sort of lighter note, more niche note at the very least. You wrote about Newsmax at its IPO. Was it
Yeah,
last week?
it was March 31st. Yeah.
Yeah,
Uh,
and was way up out of the gates, and then is pulled back quite a bit. Not that they're alone there, but down. I think it reached as high as, let's see, let me pull it up here.
255 a share.
So yeah, 255 a share. I guess closing is like 233, but now at $56 a share. You wrote about the reasons why this was doomed to fail no matter what. Tell us what you found.
So it was somewhat interesting. It effectively became the latest meme stock,
Right.
to the point where like it was, I think, getting more headlines than CoreWeave, which was the other highly anticipated IPO that was around the same time. The company is a cable, predominantly distributed news company, that they IPO'd through I think it was a Regulation A plus is what it's called. It could just be Regulation A. But what they do is they limit the IPO to 75 million. It gives them more ability to sell to retail investors. Um, they initially priced at $10 a share. Because the IPO size is limited to 75 million, they only IPO'd with 10 million share or with 7.5 million shares. So it essentially had like all the ingredients for a really volatile stock. You've got a devoted group of fans, subscribers, right? Like presumably the people that are watching Newsmax are big fans of Newsmax. You've
Mhm.
got a low float, which lends itself to volatility, and even at the end of March, there's still a lot of speculative energy, a lot of the buy the dip and FOMO energy in the market. And it priced at 10, it started trading at 14. For the investment bank, they were called, or the lead agent on it was called Digital Offerings. Like they hit it out of the park as far as executing on the IPO. They started trading at 14. That's a 40% premium to where they're priced at. That's right in the zone where it's not so overpriced that you like miss the mark on your pricing of it, but it's also juiced a little bit for the early investors. So they really delivered on that one. And then the stock took off, ran as high as 255, it's up 2,500% in the next couple of days. Um, the company's bad though. Like the company's not profitable. It very much ticks like the same boxes as like GameStop did back in the day, where it's like a declining industry that's not super profitable and a company that's not really making any money, but it gets this combination of catalysts that really juice the performance of the stock. Um, 4 days ago, if we hadn't had the tariff thing and all of that 4 days ago, it could have kept running. Like it could have gone to like 750 a share. I mean, it's the kind where it's so disconnected from the fundamentals that there's really no upside cap on it. It's just whatever people are willing to pay to buy into the momentum. It really looked that way. Now, given the market's movements for the last couple of days, I am wondering if it's the last meme stock, or at least for the foreseeable future,
Right.
right? Because that bull
Probably
sentiment has
not last
faded.
ever, but yeah, foreseeable
No,
future.
for foreseeable future.
Yeah.
Uh, I did going through the S1 on the company, so they're sort of prospectus documents for filing. They are money losing every year. They're paying out 20 million of a $40 million settlement for Smartmatic, a vote tabulating company. They still have a big overhang with a lawsuit from Dominion that's supposed to go to trial this year. Even with those set aside, they're still losing money. They own like a nutraceutical, so I assume unregulated pharmaceutical adjacent company called Medix Health. They have a insurance arm that sells life insurance and annuities. It's really a floundering business that if we were in a normal environment, I'd be like, hey, don't buy this, stay away from it. The company is not good. In this one, I think people can sort of make that. I don't think people are going to be going out and buying it anyway, just because the
Yeah.
market environment is so tough.
This was
Um,
higher up on our agenda on when we started setting the schedule for this on Wednesday pre-tariff. So it
yeah,
became more self-evident. Maybe don't buy any IPO really right now, but a money-losing one in particular. Uh, I think our audience is probably smart enough to know that. But hey, I mean
it's
they're probably the highest rising stock in the last week, like
yeah,
300% almost since their IPO price. So for a week, they can take a victory lap.
yeah. They're still way up from the IPO. I mean, it's a little bit like the DJT ticker, so Trump Media, where it's
Yep.
like devoted fan base, not profitable. It's just going to trade based on momentum. Same thing with GameStop. Uh, those meme stocks are just it's the opinion of crowds is the only thing that is really driving them, and there's nothing to save them if that opinion ever turns. Um, I don't know. Tariffs hijacking the market, hijacking the podcast, hijacking my brain.
Yeah. Yeah. Like this is, I think we've punished ourselves enough. We can close it. We can end it right here. But hopefully we're right in the thick of it right
Yeah.
now. Hopefully there's some sort of sanity or sense of direction, at least to a degree, by the time we're sitting here next Friday. The good news is the weekend starts in a few hours and markets will be closed. I think that's the best thing you can say. So enjoy your
You know
weekend,
what?
everyone. Don't look at your portfolio.
And I do want to leave one. Right now, we are definitely hurling babies out with bathwater.
Mhm.
This is, I would not be super eager to buy this dip. I would give it some time to
Oh,
settle out. I
this
mean, we had,
definition of a falling knife, and don't try to catch it.
yeah, so let it bottom and let it rattle around a little bit. Don't just don't see Nvidia down like 30% and be like, buy, buy, buy. Give it some time to settle out. If you miss an ideal entry, it's fine. You can
Yeah,
still get a favorable entry on stocks that are down 25% instead of 30%. Don't
right.
don't try and time the exact bottom.
Right. Yeah, Mike typically recommends, once you see a trend upward and there's sort of a clear, or at least clear-ish bottom established, yeah, it's okay that you've missed the first 5,
20%.
10% of that, you know,
Yeah.
of,
Yeah, you
of
could
that
if
return
you
or
miss
recovery.
yeah, if you miss the first 20% of a rally and the last 20%, so you get in late and get in early, you still catch 60% of a rally.
Right.
Um, so this is not a
Don't
throw
be
the
a
rat
hero.
money at, yeah, don't be a hero. That's how we leave it. Don't be a hero this week.
Yeah, yeah. And that's, like I said, best thing is probably that market closes in just a few hours. And we'll see where it ends. It's about the same now as when we started the podcast. But yeah, we'll see everyone again next Friday. Hopefully much brighter times and enjoy the weekend and yeah, get outside. Get away from your from your trading screen and your portfolio. Thanks for joining us on today's Street Check, and we'll see you next week.